Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We're coming to you live from the CNBC TV 18 Motilal Oswal studios. Tuesday morning, yesterday was quieter, except, of course, the rupee, which hit a new all-time low. Let's hope that there is stability, continued stability as we count down the last, 10, 12 days of 2025. I'm Prashant. With me, my colleagues Nigel and Surbhi. Guys, good morning.
Hi, morning.
Hi, morning, folks. Markets today, actually, Asian markets not quite feeling the love because there's a big slide out there between 1 to 2%. But let's see, because the bulls did prevail yesterday. Yes. They did manage a 26,000 close. So maybe they'll continue to be in this magic market.
Well, that's right. India outperformed yesterday. So we hope that we continue because for the year we've been underperformers. But off late, last 2.5 months, India's actually outperformed or performed in line. Pretty good times.
Absolutely. And I think let's see if 2026 can be built on the back of this underperforming year in a better way, in a better setup. It is certainly a better setup. I mean, how much of the, so to speak, poison is out of the system in terms of high valuations and all of the excesses, etc., is, of course, up for debate. But certainly, it's been a tough year, and we look ahead. Now, let's just quickly take it from the top in terms of what you need to know as we begin this new day. So, U.S. equities paired early gains, and that's a final close. Nasdaq down 0.6, S&P down about 0.16%. Continued pressure. I mean, these are the two names I put out yesterday as well. So, and both reported on different days on last week, Broadcom and Oracle, and both on their respective days when they reported fell 11%. Oracle down another 3%. So 11% last week, 4.5% yesterday, 3% today. So that's a steep cut for Oracle. Broadcom was down another 5.5% after Friday's 11% sell-off. iRobot was down 70% after the company essentially filed for Chapter 11 bankruptcy. And basically decided, it's kind of sort of proposed that it sell itself to its Chinese suppliers. In terms of just some news about who's ahead, and this is very, very stark, it was almost as if the prediction markets were betting on the fact that Kevin Hassett will be the new Fed chair and that Trump would pick him. But guess what? It's complete U-turn, and prediction markets are now favoring Kevin Warsh as their new favorite Fed chair. So two Kevins in the race, and we'll see. I mean, who comes out on top? But in terms of what market perception is, it's Warsh who's now ahead. 10-year yield was down 1 basis point, not very much by way of change. Oil prices are about 60, so they've lost about $5.5 from the highs. And this, of course, is on the back of expectations once again that this time, and there'll be many this times, the Russia-Ukraine war comes to a halt. Pressured, of course, brokered in that sense by President Trump and the United States. Zelensky essentially saying that they're going to drop their ambition to ever join NATO is a big one. It was the crux of the issue, but there are still territorial sort of aspects which need to be settled. And whether Ukraine will cede territory, which Russia says it now occupies and it will not give back. So those are things which will need to be resolved. Tonight, you get the U.S. November jobs data. Consensus expects 50,000 job additions. There'll also be October retail sales and weekly ADP print. But the big one, of course, is the November jobs print. And, now, of course, we're back on track. It was all over the place because the government shutdown. Usually the data comes out on a Friday. Rupee all-time low against the dollar, 90.78 is where we sort of made that low, and we left off at 97.3. So, again, focus on this one. It's been a bit of a worry, right? I mean, losing on currency, even as you're looking to make capital gains, has been problematic. Now, just the levels, not very much changed because, I mean, hardly any change at the index level yesterday. The 20-day is 26,031, almost unchanged from where it was as of Friday's close. The Nifty Bank 20-day is 59,292, and we're very, very around these levels as of yesterday's close. The downside level, 25,750 on the Nifty and 58,850 on the Nifty Bank. So that's the overall picture. Yesterday, as we put out, the insurance amendment bill did not go through. In all likelihood, perhaps it gets to the Parliament today. The Cabinet's already cleared it. So keep an eye out on that. We'll get you when it's tabled and when it's cleared. F&O positioning, F&O stats, how are we looking? Nigel is standing by with that. Nigel, over to you.
Well, a quick word first on the cash market flows. And yesterday you had the DIs that bought while the FIs sold. And there was a marginal net buy number coming in from the institutions. You know, the DI buying outweighing the FI selling yet again. But the bigger point was in terms of volumes. The volumes yesterday from institutions, both the FIs as well as the DIs, were relatively lower in comparison to the average that you've seen in December. It's that holiday, season that's picking up, and also lack of any large trades, actually. Both those two could have weighed, but there's going to be a declining trend from here on as institutional participation does dry up for a couple of weeks or so. Moving to what the FIs did on the future side, well, they covered some mild shorts on the index, but they added some shorts on the futures market itself, though they continue to remain net long on the stock futures and they're net short on the index future side of things. In fact, to put a percentage to that, the FI net short positioning in percentage terms on index futures is at around 89%. Moving to the options data, then the PCR, that's gradually moving towards the 1.2 odd mark, more or less in the middle of that range that we have seen. 1.1, 1.2 is what we've seen for the last few trading sessions. So here action both on the call as well as on the put side. And yesterday's trade, actually, writers made money. The 26,100 call, there was massive writing being seen out there, with the premium declining to less than 30 rupees. Even if you look at the 25,900 put, well, out there as well, there's a big amount of open interest built up, and that premium's down to around 20 rupees. So just punching in both these premiums and the kind of action that you saw in the options market, you get a broad range. Remember, today's the weekly expiry that plays out as well. So the broad range you're looking at is 25,850 on the downside and 26,150 on the upside. That's the range for the day itself. But the Nifty Bank, that found its form yesterday. It's trading above the 20 DMA, which is the crucial mark that we're seeing out there. And that one will have to lead the way. Remember, the recent high is at around 60,115 odd. But I think the index to track, not just for now, but for the next few months, is going to be the tech index. Because that AI bubble gradually seems to be losing a lot of interest out there. That AI trade that was very, very strong all through 2025 in the Nasdaq as well. It's replicated out there. But the IT index, after underperforming, for majority of the year, it's gradually been showing signs of outperforming. So let's see whether or not the tech index can give up its recent underperformance for the year and actually go by the trend that we've seen in the last 3 months, when tech has outperformed the Nifty and outperformed most indices. I think that's the index to watch for the next couple of quarters.
Oh, absolutely. Tech it is. And tech is getting beaten up quite badly across Asia, actually. Most of the screens are flashing red, like we mentioned. And the cuts are as much as 1% to going up to 2% in the South Korean markets in their mid and small cap indices. So it's pretty much a all fall down kind of a morning. Can India buck the trend? By the way, yesterday's trade numbers were quite encouraging, because not only did our trade deficit reduce, India's exports to the US, by the way, have shown improvement. And much, much better in November compared to what we saw in October. So overall, the trade numbers are looking good. Whether that offers any respite to the rupee or not, we will have to see, because that's been the biggest problem point for the market, the clear slide. Now, this is what we're getting because of this overall weak global sentiment. Will probably start gap down once again. It's like a repeat of yesterday. Yesterday, the bulls managed to prevail by the end of day's play. Let's see how today shapes up. 70 points lower. That's the indication on the GIFT Nifty, at least as of now.